Hey, welcome back to my channel. It's Miss Kellie Michelle, and today I have a special guest. This is TJ. Say hello, TJ.
Hi, everyone.
Yes, so I have been getting questions about how people should start business entities for their corporate rentals, right? So I am not a specialist on this. So I decided to bring TJ on today so she can talk about how you set up your business entity, what you need to do, and what you need to set up your business banking account. So these are steps that you should do at the beginning of your whole journey. Before you go look for properties, before you do anything else, you need to set up a business entity. So TJ, go ahead and introduce yourself and tell everybody a little bit about your background.
Well, thank you so much for having me today, Kelly. I'm honored to be here and share time and space with you and your guests. My name is TJ Halsey, and I am the CEO of Legacy Wealth Financial Group. And Legacy Wealth Financial Group is essentially a planning firm where we work with entrepreneurs, small business owners, and individuals regarding ways that they can create, build, and sustain wealth. And we do that through two primary buckets. One is planning for business, and the other is planning for life. So when you think about business, there's so many different facets that go into that, right? Because you can be in business at any stage. You can be an entrepreneur just, that's getting your feet wet. You can be an entrepreneur that knows absolutely nothing about business, don't know where to start. Or you can be a very seasoned business owner with significant assets. So no matter where you are at any stage of your business, Legacy Wealth Financial Group is here to help. Okay. Now, the other bucket is what we call planning for life. Okay. Once you're at a certain point in business or just in life in general, then we talk to you about asset protection, asset transference, and planning for generational wealth and leaving a lasting legacy. And one of the ways that we do that is a proprietary system that I call the LIFT system, which stands for legal, insurance, financial, and tax, because those are the four primary pillars that you really need to have in place for any aspect of business and life. And then we kind of go into the important foundational protections like having a will, a trust, a power of attorney, and other essential foundational documents that you will need to protect yourself. Okay. So that's pretty much it. It sounds like a lot, and it might be in some instances depending on where you are in business, but that's pretty much what we do.
Yeah. So, and that's great because once people start their journey of entrepreneurship, eventually they will get to that stage where they have to protect themselves and protect their assets and build their wealth even more. So that is great that you provide all of those services, right?
Absolutely.
So tell me, why should people set up a business entity? Why is that so important?
Well, it's really important for people that are going into business to set up a business entity because it basically protects you and it shields you from liability. It separates you from your business so that you're not one in the same. That's very important, but you don't necessarily need to make that distinction in the beginning if you're just kind of testing the waters, trying to see what interests you, trying to see if this is just going to be a long-term hobby, or if this is something that you're really seriously considering providing a future for yourself with in terms of the income that you make from the business. And if you're going to grow this business into a brand. So depending on your goals, it's really important to have that conversation with yourself, I would say, on what your objective is. Like, what are you trying to accomplish? What is the end game? Okay. And depending on those types of considerations would determine the direction that you need to go for the type of business that you would set up, the business structure that you would set up for yourself. So I would just say, just as a short disclaimer, that the information that I'm providing here today, obviously is just for educational purposes only. This is just information that I'm sharing. I'm not here representing myself as a lawyer or anything like that, a tax professional, financial advisor, or anything like that. You always want to have those types of trusted advisors in place so that when you have these types of legal questions or tax questions or any type of thing that could have implications for or against your business, you definitely want to have someone that you can talk to that is a trusted advisor that is well versed in these types of matters. But yes, so going back to your question, having a business structure creates a legal identity. It separates you, the individual, from your business.
Right. Okay. All right. So we're clear on that, the importance of having a business entity. Now, you mentioned just a little bit that there are different types of business entities, but what type do people usually start with? And then when should they move into the next type of entity?
So that could be a loaded question. So let's try to dissect and unpack that as best as we can with the time that we have, right?
Okay.
So let's just kind of go through some of the more popular types of business structures. So you have a sole proprietorship, and then you have a C corporation, and then you have an S corporation, which we'll get into these, but an S corporation is really not a business structure. It is more of a tax classification. So we'll kind of try to talk a little bit more about that. And then the last one would be an LLC, which is a limited liability company. A lot of times people say limited liability corporation. No, it is not a corporation. LLCs are limited liability company. Your corporations are typically referred to as a C corp, or you incorporate your business, and you can elect to be taxed as an S corp. Okay. So, it can get a little confusing, but I always have visuals and graphics that I'm happy to provide, if anyone has any other particular questions about it.
Okay.
So let's start with the first one. So with a sole proprietorship, basically it's really simple to form. A sole proprietorship is basically you're just doing business. You haven't really put any type of formal structure around anything. You are just operating. You might be selling something on eBay. You might be selling something on Etsy. It's simple to do the taxes on this because it's basically you filing your own individual tax return. But these are just, a sole proprietorship basically is just you. Okay. It doesn't really help you with like business credit or having a business bank account or anything like that. You are just solely operating as yourself. Okay. That is not a structure that I recommend, but I do understand that people have to, figure out what it is that they want to do. What are they comfortable with in terms of business, where they want to go, how do they want to grow, right? So that is what a sole proprietor is. And essentially, when you file your taxes as a sole proprietor, you file it with your own social security number. That's it. And then the next one we talked about briefly was the C corporation. So the C corporation is a little bit more involved. A lot of people tend to be scared away from it, because they hear that it's double taxation on a C corp. I'm gonna stay away from that. I don't want to be double taxed. If you think about it, you don't create a business to be scared about being in business. Right.
True.
You create a business, especially if you're trying to create a brand around your business and scale your business and amass any amount of assets and wealth as it relates to that business. You want to make sure that you're protected. So having a C corporation is a formal structure that you would put around your business that basically does separate you from your business. Okay. Now, in terms of taxes, brief note, we're not talking about taxes today, but just a brief note. When people say it's double taxed, that just means that you're filing your individual tax return and you're filing your business return. So you'll be taxed as an individual because you are, in fact, a shareholder of your business. So any type of revenue, that income that is generated out of that, profits or losses, you can file that. But you will be taxed as an individual, and you would be taxed on the profits and revenues of the business. So that's where the double taxation comes in. But that's nothing to be scared about. If you're making millions of dollars, what doesn't, doesn't matter. If you're making six figures, it doesn't matter. But there are things that you can do to protect yourself, and there are other things and strategies that you can implement in terms of taxes that would allow you to, what I like to say, avoid unnecessary taxes.
Okay.
So tax avoidance is legal. Tax evasion will land you in jail.
Yeah.
So, I mean, but basically that's it. So like I said, with a C corporation, it's a formal structure. Yes, you are taxed as an individual. Yes, you're taxed on the business. It does shield you from liability, from personal liability. You are a shareholder and in the business. So there is that. And for the C, and it's not necessarily ideal for a small business. A lot of the people that I work with are small businesses, so they create LLCs,
Okay.
which we'll talk about. So when you're forming a C corporation, basically, if you start a business and you don't classify it, then it really defaults to either sole proprietor or C corp, just depending on the nature of the business.
Okay.
So you definitely, if you want to put some more structure around it, you can classify your business just to, just to make sure that you understand what type of protections and the direction you're trying to go with it.
Okay.
But like I said, for small businesses, C corporations would not necessarily be ideal. Most of these businesses are not trying to go public, and they're not trying to seek funding or anything like that. So I will give you a quick example of one of my businesses that is, I've elected to set it up as a C corp.
Okay.
So I own a franchise, a healthcare franchise. That is one of my businesses. And basically, I could have set it up as an LLC because I'm a small business, but this is a franchise. I do intend to grow this business to some degree, and I have some different aspects of the business that will probably grow legs, but they're all related. So again, I'm in the senior living business. It is a healthcare franchise. I help people with assisted living, independent living, or memory care. So with that business down the road, I would like to create, buy some real estate and have some single family homes and create some residential assisted living homes for seniors, right? So with that, I had to create a separate business. I had to create a real estate investing holding company. So that is an LLC, that real estate business, when I started purchasing the properties and everything. And then my franchise is actually a C corporation. So the reason I did it that way is for favorable tax treatment. I can still flow the income through, to my individual, but the way that I'm doing it is I'm using something called this is a little bit more advanced. It's a strategy around taxation. So I created it so that I could have a 401k, a solo 401k for myself for retirement. And I also wanted to make sure that, I had a way that if I needed to have capital for my business, for any of the startup cost or anything like that, that I could actually pull from my retirement through something called the ROBS strategy. It is a legal term under the IRS. It's called the ROBS, ROBS strategy. And then that way it allows me to utilize my personal retirement funds. And since I'm not retirement age, there would have been a lot of tax implications around that.
Right.
But this particular strategy using a C corporation allowed me to legally set my business up and utilize retirement funds to inject cash from my personal retirement money, basically to bootstrap my own business without any type of penalties. So so a C corporation can have some very favorable advantages, I would say, to just depends on, but again, it's all around strategy. And this is the reason why you need to talk to someone when you're setting up your business, to make sure that you can articulate what your goals are and that they are in a position to help you understand the best structure for your business. So the C Corp was best for me in that regard for the franchise. Now, moving on, S Corporation again. S Corporation is not necessarily a formal structure. It is just a tax classification. With a C Corporation, there's that. But an S Corporation is basically just a C Corporation that is elected to pass through taxation. But once again, you're passing it through, meaning you filed your single tax return and your various different schedules that you attach to your income tax. So that's basically what the S corporation is. It is really favorable for if you're trying to have a strategy around your payroll and your FICA, so your Medicare comes out, right?
Right.
Medicare comes out and Social Security comes out. And if you have payroll, that can get very expensive, just depending on what your payroll is.
Yep.
And then as a shareholder yourself, you may take a salary. You may take a salary and you may also pay yourself a dividend. Okay. So there are structures, there's this particular structure that you want to put around it by classifying yourself as an S corporation so that you can minimize your taxes for payroll. Okay. So, and I can give you an example of that. I guess I would say, and this is not trying to avoid in the sense that you're just trying not to pay taxes, but it is totally legal. So if you make $100,000, you're a small business owner, you made $100,000 this year. Let's just say you were not classified as an S corp, and you just, you file your taxes on that $100,000. Well, whatever your tax rate is, percentage, whatever tax bracket you fall in, your income tax rate, it could be single, you could be head of household, you could be married, whatever it is, whatever that tax rate is, you're going to be taxed on that entire $100,000. That could be very high. Yeah. Now let's just say you have that same $100,000. You're still a single person with an S corporation, but you elect to pay, because you're paying taxes on this, you're trying to set money aside for Medicare and Social Security. So let's just say you pay yourself a salary of $70,000. Okay. So not even a salary. Let's just say you give yourself, because with an S corp, the IRS wants you to take a reasonable salary. So you have to figure out what it is in your particular industry that will be considered a reasonable salary. So then you account for that, right? So whatever that amount is, we're still talking about the same 100,000. So whatever that amount is, let's say it's, I don't know, for simple math, let's just say a reasonable salary is 30,000. Then let's just say that you're going to pay yourself a dividend, a bonus, something like that, $40,000. So that makes up the 70. Okay.
Yeah. Okay.
Now you have 30,000 left and you've got to pay taxes on that 30,000. So would you rather pay the taxes on the 70 or would you rather pay the taxes on the 30?
30, of course.
So I mean, it's, that's just a loose example. It's not the best one, obviously, but you can do different things that are within the realm of the law, right? And save yourself a significant amount of money, as opposed to having to pay taxes on that whole $100,000 based on your normal individual income tax rate versus the S corp, where you can pay taxes on this small percentage or whatever percentage this is, and the difference would go to you, without that tax consequence. So an S corp is also a strategy. A lot of times people will just go set up an S corp, but they really don't understand why they're doing it.
Right.
And with an S corp, you have to, there's very specific requirements. You can only have up to 100 shareholders. You don't have a whole lot of wiggle room like you do in a C corporation. And there's very specific laws around it. So once again, talk to your tax professional, make sure you understand your goals and what you're trying to do, where you're trying to go with your business, and determine if at this beginning point as an entrepreneur, you're ready for an S corp, or if this is something you might want to look to convert to later on, because you can change tax structures along your business journey. And some people say that's not recommended. That's not true. I mean, you start out here, you get here, and then you grow here, so there are going to be times where you may want to revisit changing things in your business. You always need to have a business checkpoint, right? So there's that. And then with a limited liability company, that is the most common one, the LLC. The LLC is very favorable. A lot of times most of the people that I work with, they create their LLC, right?
Mhm.
There's not a lot of formal things that you need to have in place with an LLC. It does combine the elements of a sole proprietor and a corporation. So you've kind of got like this great little hybrid here.
Mhm.
And why, people like this one too, because it does shield them from liability, from personal liability. So if you were to have this LLC in place, like most of us do, and you have someone that tries to sue you in the business, well, if they come after you, they're not going to be able to attach that claim to any of your personal assets, your home, your car, your bank account, none of that. All of that is shielded from the liability that would come in a suit. Then, if they came after you for the business, then yeah, they may have a claim, but there's that. But that's the reason why you have to have other things in place like insurance, depending on the type of business you have. If you were a physician or a professional, like a lawyer, you would have to have like malpractice insurance. But these are some additional protections that you would need to have in place if a suit were to come about, right?
Right.
So yeah, so now I know sometimes people in real estate, and I think that's kind of one of the things that you're doing is you work with a lot of clients that's in real estate.
Right.
They will create like a holding company, and sometimes you'll have, let's just say, one primary real estate holding company here at the top that could be an LLC.
Mhm.
And then let's just say you start buying rental properties, right? And so you could have it to where you are short-term rentals or buy and hold, depending on what your real estate strategy is.
Mhm.
That would really determine which strategy you want to take. I do apologize. My lawn care people are here.
That's all
I had
right.
no idea they were coming today. I apologize. Let me know if you can still hear me.
I can hear you fine. It's no problem.
Okay. So what a lot of people will do is, if it is a buy and hold situation, where they have renters in there and they're getting passive income from the rental property, then they will create each individual home as its own LLC. Some people
Right.
do that. Now, there's different things that you can do. This is just one example. So if something happens in that one home, say you have 4 different properties,
Mhm.
okay? If something happens in that one home and somebody comes after you and files a lawsuit against you, obviously you have homeowners insurance, right? So you
Right.
have these types of insurances. Once again, insurance is very important. It's part of the LIFT strategy, LIFT.
Mhm.
Um, but if there was to be an attachment, a claim against you, they could sue you and possibly attach to that particular home. But it would not affect your other 3 homes, and it would not affect your holding company, right?
Okay.
So
Yeah.
this is why it's really important to understand and talk to a legal professional and tax professional, and make sure everybody on your trusted advisor team is on the same page,
Mhm.
because you want to have a strategy and you want to have that liability protection, right? So if you just had one company that held all of your properties, then guess what? They could come after the whole kit and caboodle.
Yep. Yep.
So so a lot of people just don't really think about these things. They don't really understand the tax consequences that could impact them. And this is a very litigious society that we live in today. Everybody seems to be filing lawsuits left and right for anything, slips and falls. Who knows? They're looking for reasons to sue you.
Mhm.
Everybody's looking for a come up, not necessarily a illegal come up, but it happens. So
Mhm.
you have to plan for the unexpected, basically, is what I'm saying.
Okay.
So that's pretty much the entities and the structures. And again, that was really, really, really high level. But I do definitely invite, anyone who wants to have an additional conversation with me. So we can continue to talk a little bit about some of the advantages or what you need to do, or disadvantages, or business bank accounts, how that works.
Okay. Well, I did want you to go over the steps to set up a business entity. and then just the requirements for the business banking account. And that's pretty much it, because realistically, what you just went over was great. I started out myself as an LLC and then kind of transitioned into an S Corp, once I made a certain amount of money. So yes, there are definitely benefits to what TJ is saying, especially if you have multiple properties that you're holding in as midterm rentals or corporate rentals. If you own multiple properties, setting them up and separating them out is definitely a good thing that I need to do myself. I know I need to do it. I just haven't gotten around to doing it. But I definitely need to do that myself. So great tips. Now, can you just go over really quickly, what are the steps for someone to start a business? Like, what do they need to do? Where do they need to go?
So basically, with your limited liability company, those are state-driven entity types. So as an LLC, like I said, you definitely want to make sure that if this is what you're wanting to do, you're switching over from sole proprietor and you're starting to make some money, go ahead and create you an LLC. It gives you that liability protection. You start with your state secretary of state. You go in and basically there's different ways. I guess so I'm thinking about how I did one of mine. I set mine up. I looked at, for my real estate business, it's an LLC. I went to Nevada because Nevada has favorable tax treatment for real estate investors and things like that. So I set my LLC up in Nevada. Now I live in a different state, so that was considered a domestic, where you set it up, a domestic LLC setup. In my state, because I'm doing business here in my state as well, I had to set it up as a foreign LLC.
Right.
So just make sure that it's always good to set your business up in the state as a general rule of where you're actually going to be doing business. But again, if you are operating across state lines, then you want to make sure that whatever state you're doing business in, you also go to that local governing body and set up the necessary things like licensings. You may have to be registered to operate a business in a certain locale. There's just different things that you need to do. So always start with your Secretary of State. You basically will you need to choose a name. Start there. Make sure that your name is available. And for most Secretary of States, that's the first step in an LLC formation. Just make sure that they call it a name reservation to make sure that it is available. If you go and you do all these other things like going to create your registration in a domain.com and then you come to try to do your business after the fact and it's not available, then you just wasted money. Right. So do things in order. Always start with the name. And then once you do that, it's available, then you will file what's called your articles of organization. Again, we're talking specifically about the LLC. So you file your articles of organization. These are called your formal formation documents, okay? And then you will choose a registered agent. A lot of times people won't choose a registered agent. They'll just act as their own registered agent. And what that means is that any type of correspondence that comes in regards to that business, if you have to ever be served, if someone is suing you or something like that, there has to be a documented registered agent on file to make sure that there's a person specifically that they can deliver this correspondence to. That's just required. You can serve as that person yourself, not a problem. And then you just have to make sure that you want to be served. If somebody serves you and it embarrasses you and you don't want to be served on your job or wherever you are, you just might want to think about that. A lot of times people will pay for a registered agent service, but again, keep in mind there is a fee for that. The next thing you want to do is decide on whether or not you want to be a member in your LLC or a manager. So the reason why this is important is because they have something called, with the LLC, you can be member managed or you can be manager managed, and it should be on your articles of organization document. It will ask you that question. Are you going to be a member? Are you going to be a manager? Basically, a member, remember what I told you with an LLC, you can have basically, especially if you elect to be classified as an S Corp with your LLC and shareholders, you can have people that want to be a member, but they may want to be a silent member.
Uh-huh.
So let's just say you start your LLC and your mom wants to contribute capital to the business. She wants to be involved, and you may even put her on payroll, but she doesn't want to be involved in the operations of the business. She just wants to be a silent partner, a passive partner, maybe receive some kind of earnings from the business because she is indeed a member of the business. That's fine, but you just have to designate who will be the members and put that on your forming documents. Now, a manager, a person that is a manager in the LLC, that just basically means that they're going to be involved in the day-to-day operations. So you can be both.
Mm-hmm.
So there's that. But just want to make that little note. And then the next thing you want to do, your operating agreement always controls. So you'll have your operating agreement where you can actually spell out those types of things. If you have silent partners, if you have certain managing members or members that are going to have certain functions within the business, then you want to spell all of that out in your operating agreement. Because if a suit ever arises, that's the first thing that the court is going to go to. They're going to look and see what were the intentions of the parties at the initial formation of the company. What is it that you intended for this person to do or this person to do? Because sometimes people will fight. There's like infighting, right? And if somebody in the business comes after you, you want to make sure that you document everything when you're starting your business out in your operating agreement so that there is no question what you intended. So there's that. The next thing that you want to do is create your EIN. So your EIN is basically, a lot of people refer to it as a tax ID number, but it is an employer identification ID. And I think I'm saying that right. Employer identification number, EIN, right? Essentially, it's just a way for the IRS to know who you are doing business. Because once you start doing business, guess what? You're putting Uncle Sam, as they call the government, on notice.
Yep.
And you ever seen that Uncle Sam meme was like, I want you? It's true. They want your money. You're doing business, I want a piece of it. So, a lot of times people will stay in sole proprietor status all day long because they don't, but the minute that because some people, sole proprietor operating under the table. I'm not going to call out any particular industry, but we all know some people that operate in cash transactions, whatever, sole proprietors. But in a nutshell, with your EIN number, it is a way to designate you in business. Some people refer to it also as a TIN, ITIN. So the EIN is good. You have to have that when you're starting your business. Otherwise, when you file taxes, you just file with your Social Security number if you're a sole proprietor. But if you do set up an LLC or any other business structure, you will need to have your EIN, okay? If you're operating a business, there's a lot of, we're operating now in a borderless economy. So there's a lot of entrepreneurs that are doing business in the US that are not actually living or residents or, of the US. So in that regard, they may file for an ITIN. It is a taxpayer identification number for someone that's not necessarily a resident or an alien of the United States, but they're operating a business or transactions in the United States, or they're operating in their country, but they have goods and services that are being transported to the United States through the stream of commerce for sale, right? So there's that. But anyway, EIN, that's important. And lastly, just basically, you want to make sure that your compliance is in place. When I say compliance, I'm talking about get any licensing, check with your local zoning board to make sure that you can operate in the business. There's a lot of people that are operating home businesses, especially in the advent of COVID, in the pandemic. We're at home, people running home businesses. But now we're kind of dwindling out of that a little bit. But a lot of times people will start home businesses, but they wouldn't have a license to do business in their home. And some people have been fined. There have been, regulations against that. So again, just check in your local area to make sure that you can operate in the way that you're trying to operate, whether it's a home business or any other business. A lot of times people, they don't have a physical location for their business. So they're utilizing their home address, and they're like, well, I'm not really doing business in my home. I'm just using my home address. But again, for some areas, it doesn't matter. They still consider that a home-based business. So just check with your local laws and see what you can do. Stay compliant. Make sure that you file your initial reports. Make sure you file your annual reports. If you're living in California, there's something called a franchise fee. It's like $800 a year. I mean, who knows what that is or why? We don't have that in my state. So always make sure that you understand whatever state you're doing business in, you understand those laws. Because again, like I told you a few minutes ago, my LLC was formed in Nevada. I don't know anything about Nevada, but I guarantee you I researched the laws in Nevada before I started my LLC to see if that was something I wanted to do. And then when I filed my foreign LLC here in my state, I made sure that I was in compliance as well. Not every state requires annual filing reports. Some do. Make sure that you don't lose sight of that, because if you do, then your LLC or your business could be suspended by the state, and then you'll have to file paperwork to reinstate your business, and that's just more money.
Yeah.
So there are a lot of moving parts, and I know I'm talking about a lot. I really intended for this to be high level, but these are some of the main things that you want to do when you're starting your LLC.
Okay. All right. So you just really answered the next question as far as what you need for your business banking accounts, because really all you need is your documents for your LLCs from the state, right? Your EIN and your articles. Your articles, right?
Yeah. So yeah, that's it. So you need your EIN, your forming documents. If it's an LLC, that's going to be your articles of organization. If it is, if you incorporated your business, or if you have a C corporation or whatever that might be, then you definitely want to have what's called your articles of incorporation. Okay. Some people operate, like I said, as a sole proprietor. They may say, I'm TJ Halsey doing business as Necklace Creations. Okay. So they may have a DBA.
Yeah.
Some banks will allow you to open up a business checking account with a DBA instead of having it as as your name. Because what a lot of times people will do is they're not really ready to formalize their business, but they don't want to operate in their name. So they'll do a DBA with the bank.
Okay.
And for them, that's helpful because they could try to create business, like a business, what do they call business credit, if they have a DBA or something like that.
Okay.
But it's really
that.
Yeah,
I didn't know that you
it's really
and
yeah.
get
A lot of times people do it. There's people will do a lot of things that they think is going to work and it won't work.
Okay.
Business credit is a whole nother. We can do another video on business credit.
Whole nother beast.
Yeah. Let me just say this. Don't do that. Don't do a DBA. Like if you're really trying to get business credit, you have to have a business. It has to be a legitimate business, and you have to do some other things and some other steps to get those business, the DUNS number and all these different things. So we could talk about that another time. But yeah, so for the business bank account, get your EIN, your forming documents. What else do you need to have? Your initial deposit. Most banks will require you to make an initial deposit. So when you go into the bank, just be prepared to give them $100 or whatever it is that you need to start your business. Okay. And then there's different types. Because when I remember when I first started one of my businesses, I had to create something called a merchant account.
Okay.
Now everybody uses like PayPal, Stripe, and all these different merchant. Everything is electronic now. You just have an app and you just, so you may not have to set up a merchant account with a bank anymore. And the fees are probably more expensive than they charge on these apps. Like I don't know. But the thing about a merchant account, whether you do it with their bank or whether you do it on an app, all of that is still going to be filtered through a bank, because at some point, whatever money you're making on PayPal or Stripe or Venmo or Cash App or whatever you're using, they're starting to report this information to the IRS now.
Yep.
People don't like it, but it is what it is. It was bound to happen at some point. I think if any transactions over $600 are going to be reported. So if you think about it, you're still going to have to connect those applications to a bank.
Yep.
Because you're going to at some point have to transfer that money over into a bank account.
Mm-hmm.
Okay, so when you're setting up your bank account, you typically will create a business checking, a business savings. And the reason why this is important, a lot of times people don't think about this, is like, I don't need a savings account. Why do I need a savings account? Well, it's important because you might want to put your earnings from your business, especially if you're operating by yourself, even as an LLC, put some of your earnings in your savings account, okay? Then everything else that's going into your business account will be for like expenses for the business.
Right.
And, a lot of times people will use QuickBooks or some other kind of software, or they have a bookkeeper or payroll person that's managing all of this, and that's great. But if you're operating by yourself, setting up your business bank account, you definitely want to have a checking and a savings to separate those monies, so that you can kind of keep an eye on what's coming in, what's going out for the business expenses, what you're retaining over here for earnings, so that you can kind of separate those two, and it's just very clear. And then I guess the other thing is, like I said, a lot of people have goals in the real estate industry, especially the one, like what you're doing in your business,
Mm-hmm.
and you're in the audience that you serve. Business credit is very important.
Yes.
It is very important. You can try to create business credit at your bank. Not a problem. I love having relationships. Relationships are very important. People have kind of gotten away with that in banking. I don't know. But guess what? Wealthy people have personal bankers. They have personal bankers. They don't walk in and talk to a teller. They have personal bankers on speed dial. And when they go into a bank, they go into like a conference room, And so, that's what we're trying to get to. We're not trying to do retail banking, right?
Right.
But you have to start somewhere, and business credit is very important. So when you're working with a bank, you definitely want to make sure that you're establishing a relationship. Don't just walk in there just off the cuff, willy-nilly, as they say, hey, I would like to open up a business bank account. Make sure that you do some research. Find out who the key people are in that bank. Find out, do they offer favorable treatment to small businesses? Do they offer favorable treatment? And I'm not trying to talk in any type of discriminatory manner, but the reality of it is that there are a lot of disproportionate things that can take place in business with certain, ethnicities. I'm just saying, it happens. We can talk about it or not talk about it, but it doesn't make the problem go away. So you want to, there are a lot of banks now that are doing that. They have a big push to try to lend to minority owned businesses. So, just do your research. That's all I'm saying. That's all I'm saying.
Good.
So that's pretty much it.
All right. Well, thank you so much, TJ. Now it's time to tell everybody how they can get in contact with you if they want to get further information or just need help setting up their LLCs and working with you.
Absolutely. So you can reach me at yourlegacywealth.com. That is my website, and my scheduler is on there. You can go and set up an appointment with me, or if you like, you can go to set up on my Calendly link, which is yourlegacywealth.com. I want to make sure that I have the Calendly link that I provided to you given to your audience, just in case I'm not giving you the right link to it. But definitely share that with them. Now, let me just make this quick note. Is there a fee to set up a meeting? Yes, it's $50. But how important are you to yourself in terms of investing in yourself, right? For anything that you're doing to further your goals and accomplish those goals. The reason why I set that $50 fee is it's nominal. It's because I want to make sure that I hold myself accountable to you, and I want to make sure that you hold yourself accountable to yourself. A lot of times we go to meetings and we're waiting for the person to show up and they don't show up. Well, that has happened to me so many times I've lost count.
Yes.
And I had to implement something in place, right? Had to implement. This is not punitive. It is not punitive, but you would be surprised at how many people complain about that $50. So here's what I'm doing. Anybody that books a call with me pays that $50 fee. That just means that I'm going to be there, and I hope you show up. Anytime you book a service with me, that $50 is going to be refunded right back to you. So you really haven't lost anything. It's just a space holder to make sure that we are, respecting each other's time and that we show up.
Yes.
So
yes.
show up for yourself.
Exactly. Because I know I've done plenty of consultations and people just did not show up, and it's a waste of my time. I could be talking to someone else and helping someone else. So yes.
Absolutely. And it's not necessarily about the money, but time is money.
Yeah.
Time is money, and time is something that you cannot get back.
Exactly. Well, I am going to put TJ's Calendly link in the description below, so don't worry about it. I'll also include, do you want me to include your website or?
Yes, that's fine.
Okay.
That's fine. But the Calendly link is probably where they'll start.
The best way. Yeah. So use the Calendly link to book or an appointment with her or a consultation with her. And you can use her website just for informational purposes only. Okay. All right. Well, thank you so much, TJ, for that wealth of knowledge. I learned a few things today myself, and I was like, oh, I need to do that.
Oh, I'm so glad. I felt like I was talking about a lot of, it is a lot. It is a lot.
Well, yeah, it is a lot. And that's why I don't get into talking to this with people, because I'm like, I am not the expert. I do not want to give you the wrong information. And every state is different. Every city is different.
Yes.
So yeah, that's not what I do, but this is what TJ does. So reach out to her if you need some assistance. So I want to thank you guys for watching today. Make sure you like and subscribe this video so you can see more information about midterm rentals, corporate rentals, and as we saw today, business in general, right? So make sure you like and subscribe. Also, I often put some links below in the descriptions. You'll find TJ's information as well as some freebies and some of my information for my online course. So check it out. And I will see you guys next time. Goodbye.
Bye.